So when you first log in to American National's back office, this is the page that you will see available to you. In order to get the illustration software, you have to go to the expert office and kind of hover over that area there, and then just go over to the side where it says illustrate your product, where you can illustrate using the expert illustrator, the term or GUL quote, and the SPIA Express. Today, just the focus is going to be the expert illustrator because that one's a little bit more tricky. The term and the GUL is pretty straightforward, as is the SPIA. So you click on expert illustrator, and a new window should pop up, taking you to the actual site there. And this is the dashboard that you will see here. The first step in order to run the software is to click on create the client. And here's where you actually add the client's information. All you need to fill out is anything that has a red star next to it. Everything else you can leave blank. So just enter the first name, and we'll go and do my name here, Rodolfo. Last name, Sierra, and date of birth, 9/23/81, and then the gender, male, and the state of Texas. And that is it. So once the information is there, you can then go to action and click on the button that says New Illustration. Click on that, and a new window will pop up, and you'll see the client's information there, the state. Make sure you pick the plan type, Universal Life. You click on New Business, and then you click on the product. Like I say, today's the focus is going to be Signature IUL. And you press on the button Create. And now this is where we begin entering the information specifically to the client. Again, all you need to fill out is information that has the red star, but other stuff is optional, and we'll go through all the different choices so you understand what it all means. The first is the plan, which has already been selected prior to, but if you want to change it, you can do that as well. All different options that we have here. Like I said, right now the focus is the Signature IUL, so we'll keep that one clicked there. You can change the classification if you want, from a standard non-nicotine user to a preferred or standard plus or preferred plus. It's your choice, or the nicotine users. I always like to pick the standard non-nicotine or the standard nicotine user as the initial quote, because you never know what the health situation is of any specific client. That way you under-promise and hopefully over-deliver when it comes to the ratings. So for this situation, we'll just keep the standard non-nicotine user here. Always want to print dates to 121, so you can leave that alone there. That's pre-populated. No need to change that. Types of illustrations is the next one here. For the most part, I'd say 99% of the time you can use input all parameters. There will be situations out there where you can want to solve for a face amount or for premium or a cash flow. But for the most part, we'll use input all parameters so we have control as to all the different options that we have available to us. Next section is specified amount options. There are a couple choices here. I think there's 5. Typically we use 3. Either you input where you actually just select whatever the face amount is for the client. You can either maximum death benefit choice, so you're trying to get the most death benefit for the least amount of money if they're looking for protection focus. Or if they really want to use this product for its intended purpose for using it for potential tax-free retirement income, you would try to have minimum death benefit and trying to max fund the policy. So let's go ahead and do that one today just so we can see how the numbers come out when you have a minimum death benefit with a maximum cash value. So when we do the minimum, you'll see that the face amount, right now it says 150. It'll turn gray because it's going to take away the face amount because we're going to try to calculate what that death benefit amount is going to be. The next option is our death benefit option, A, B, or C, A being level, B being increasing, and C being return of premium. For the majority of the time, we would do A or B, level increasing. So for this sake of this example, let's just do a level contract. From a premium perspective, we're going to input it since we're trying to figure out what the death benefit is going to be, since we're trying to do the minimum death benefit and the maximum cash value. Let's just do $500 a month. That's on average what most of our clients are putting into their policies, so we can illustrate it from that perspective. Next option is trying to figure out until what age are they going to pay this product. So we can either pick the age or we can pick for how long. Right now it's defaulted to pay till you're 121 years old, and that's not reality. Let's just say, again, on average, most people retire at age 65, so we're going to pay to age 65. So we're going to pay $500 a month until age 65. And then the mode over here, we can change it from annual payments, semi-annual, quarterly, pre-authorized check, which means monthly, or we can do biweekly. On average, most people either pay on an annual basis or a monthly basis. Let's just do monthly for now. That way, we're telling the system that we want to try to find what's the minimum death benefits for the maximum cash value at $500 a month, paying to age 65. That's in essence what we're doing with the illustration software here. Next step is on the 1035 exchange. If you wanted to dump in some money from another policy, you could do that. Here you enter that information. In this situation, we're not going to do that, so we'll skip it for now. And then that's on a rare occasion then that we do that. For the most part, people just going to put in either a monthly or annual premium into the policies. Next step is determine what index strategy you're going to pick and choose for this solution here. So we have 5 different options. You can do a 1-year declared rate, which at this point is 4%. You can do a 1-year point-to-point with a specified rate, which right now is illustrating around a 4.82%. A 1-year point-to-point with 12.5% cap and a 0 floor. That right now is illustrating 7.16%. Fourth option is a 1-year point-to-point with 9.5% cap and a 1.5% floor. That one's illustrating at 6.31. And the last one is the 1-year point-to-point uncapped, 0 floor, and interest rate spread, going at 7.16. So you can see that both of these are going to be about the same rate of return because the strategies are very similar. So just keep it simple for now. We're just going to put 100% of the premium goes into this one strategy just so we can see what it looks like. But of course, you can always mix and match these if you want. You know, some people do 20% here, as an example. They do 20% there. As long as all the numbers add up to 100%, that's all that the software wants in this example here. Like that, right? As long as the number here is 100, we're good. But for now, like I said, we're just going to do the 100% in this strategy here just so we can see what the numbers look like using the point-to-point strategy. All right. Next button we see are the riders, cash flow, quick calculation, and max loans. And we also see some buttons on the right side over here. The buttons that we see here, let's not touch these, just leave them as is. That's the default. We need to change it, keep it like that. We can take a look at the riders. We're not going to add any at this point, but at least it gives you an idea of what they look like. So you have disability waiver premium, waiver stipulated premium, children's term, signature term primary, signature term other, guaranteed insurability, and of course it already has pre-selected the accelerated death benefits, which we want that from an ABR perspective. So we'll leave these alone. So let's go back to our policy details, which is on the top left. And let's determine what's going to be the maximum amount of tax-free income we could receive from these IUL policies. So to do that, we click on the button down here that says Max Loan. Let's go to Max Loan, and it's going to automatically take us to our cash flow screen. It's going to set up for us already. So it's going to search for a loan, has the interest rate already determined, and then here we have to determine at what age we want to take these loans out. The default will always be age 67. So if we know that our client is paying until age 65 and then we'll start taking money out the next year at 66, we should probably change this to age 66 instead of the default of 67. But again, it's your choice how you want to handle it. It can be at any age. You can put age 50, age 70, whatever you want. Remember, there are no penalties to take money out from this policy prior to 15.5 and also no RMDs at 70.5. All right. And that's it. That's all we have here on the max loans. You have options to do withdrawals. You have options to do loan repayments. At this point, we don't do those. We just do the max loans to figure out what the maximum of money they can pull out from these policies. Next step is the button on the left that says values. This right here is going to give us just a quick snapshot, a quick review of the information that we entered. So it's doing the calculation to determine what that benefit is going to be based on the premium that we're putting into the policy. So let's see here, it's thinking. There we go. All right. So based on the parameters that we entered here, if we pay $500 a month, which ends up being around $6,000 a year into the policy, the initial death benefit it's spitting out is $473,466 of death benefit for the policy. That's the minimum life insurance we can buy for a 37-year-old male that is a standard non-nicotine user for their IUL product. Now, if we scroll down, we can take a look at the calculations. So you can see here, we have our premium going in, our death benefit, and we have our surrender values. So if we scroll down to age 66, we determine that we're going to take some money out from the policy from the tax-free loan perspective. We're looking at around $30,949 of potential tax-free income being able to come out at retirement age. So as you scroll down, you can see how the income is showing in this policy in the later years as it continues to come out. Now, if you want to see the actual illustration itself, remember, what we're looking at here is only for agent view only. So to actually see what the client, you'll present to the client, you're looking at clicking on the action button on the far right, and this is where you preview the illustration. This will actually give us the full illustration to look at. So let us calculate that, and we'll spit it out here in a moment. And here you can see the illustration coming out, designed for me, by me, since I'm using myself. And here you can see just kind of a quick summary of the policy. So for Adolfo Sierra, male, 37 years old, the death benefit that we're getting is $473,466, paying a premium of $500 a month. Remember, PAC means pre-authorized check, which means monthly payment to the policy, paying to age 65. And starting it at age 67, you're looking at a potential tax-free income of $30,949 annually for up to 54 years, assuming the policy continues to grow at that 7% that we talked about earlier. And beyond that, just more details of the policy, talks about the living benefits that come with these types of programs. You get your terminal illness, your critical illness, and your chronic illness protection within these policies. Critical illness gives you 16 illness triggers. Chronic illness can't perform 2 out of 6 activities of living. And terminal illness gives you that 24 months of death in most states. And if you wanted to go into the details of how much it comes out, it's all right there for you. You can see how that is presented. And there's a lot more pages here, but we won't go through all of them. Just going to give you an idea of how the illustration software works. Now, if you want to go to your report selections, the next button on the top left over here, you have a lot more choices besides just the basic illustration. Again, I'm not going to go through all these today because that's a lot of detail. But if you ever want to play with it, you can kind of compare this policy versus other types of programs out there, other types of funds versus terms, products, qualified plans. You can do some comparisons. Pretty neat stuff here. Again, we'll do that in a separate training, but today I just want to show you the basics on how to run the illustration software. Let's go back to policy details, and let's look at some different potential scenarios that we could run with this situation. Like I said, for the most part, the way we design these programs is minimum death benefit and maximum cash value. But what if a client says, you know what, Rodolfo, I want to get the maximum amount of life insurance, and I don't really care about the cash flow situation. All right? So if we go back here, we can go back here, input all parameters, and this will clear everything out for us. And when we go to maximum death benefit, so again, we need this cleared over here. And at this point, we want to do, let's keep the $100 a month. So how much life insurance will $100 a month buy me if I pay this policy, pay 65 again, same parameters, just different calculation here, and we'll keep the policy level as well. We'll keep the strategy the same. The only thing that's different is we're going to take away the loan that we put in earlier. So to take off the loan, we go to our cash flow screen here. You can see that it's already been removed since we're trying to maximize the amount of life insurance the policy gets us. So if we go to the values, you can see now the life insurance has now gone to $833,333 versus the $473,000 we had earlier. Because now we're trying to calculate what's the most life insurance I can purchase with my premium amounts. So you can see here, you're paying that $500 a month, which is $6,000 a year, giving you that $833,000 of life insurance. As you scroll down, so you pay this to retirement age. At this point, you stop putting premium to the policy. There is some cash value there if you wanted to use it, but that's not the intended purpose of this illustration. You can see here that the policy continues to stay in force well beyond that 121 years. So right there, you will have enough death benefit there, regardless of what the situation is. Now, if you go back to your action button and click on Preview Illustration, you will see here illustration again. The summary screen is not there anymore because we're not actually doing that cash value situation. We're trying to get income. Right now, we're just trying to solve for death benefit. As you can see, there's that $833,000 of initial death benefit within the policy. You still get all the same living benefits. That has not changed. It's based off of a higher number now, given that death benefit has gone up. So you have more access to more money having this policy in place. The next one I want to walk you through is if the client walks in and says, you know what, Rodolfo, I just need, $500,000 life insurance and figure it out from there, right? So going back to the illustration, we're going to input all parameters. The specified amount, we're actually going to specify the death benefit at this point, so we're going to click on the input button here. And let's just say we want to do that $500,000 of life insurance. Again, our options, we still have the A option, which is level. B is increasing, so we'll leave that one alone as level. The client says, you know what, $500 is way too much for me. I want to see if I can, what's the minimum I have to do in order to get that $500,000 of life insurance, not just, specify the amount. So you can change the premium options here to maximum premium, minimum premium, target premium, or safety net guarantee. All right. So in this situation, let's just see what the minimum premium is going to be based on that $500,000 life insurance, and then we'll put the other options so we can see what they look like. Let's keep it also paid to age 65, and let's keep it at a monthly payment at this point. We've already kept the indexing strategy 100%, so we'll leave that one there as well. And let's go to our values button on the top left and see what numbers come out based on the inputs that we have here. So based on what we see here, it looks like the $500,000 policy, initial premium being $3,600 a year, which ends up being about $300 a month. You can see that your initial premium is actually your minimum, because that's what we're told to do. So that is what we're putting in, just the minimum amount to keep this policy in force. So we go down to our numbers here. We can see, based on numbers we've entered here, this is what the policy will do for us. Very little cash value because we're minimum funding the policy at this point. But hey, that's what the client wants. That's what the client gets. Go back to policy details. Let's play with some other options. Let's take a look and see what other premium options we have here, how the numbers change. So we know that the minimum premium is $300 a month. Let's see what the maximum premium is going to be. So click on maximum. Go back to values. And you can see here that the maximum premium is $6,282.84. So doing just a quick calculation, you're probably looking at a little over $500 a month if you were to do that one there. So let's just do a quick calculation. So we do $6,282.84 divided by 12. You're looking at $523.57 is the maximum premium you can put in for a $500,000 death benefit of a 37-year-old male, the standard non-nicotine user. Go back to policy details. There's two other options here. If you want to play with those, we can just go real quick and see what the target's going to be. So based on the target premium, go back to values. The target premium is $5,715. You can see here that that is that premium that we just entered there. So all the numbers we've been talking about, and if you've noticed that, but they're all going to be here for us. So regardless of what premium you put into the policy, you will always see what the minimum premium is going to be. So we know minimum is $300 a month, or that $3,600 a year. We see the target is that $5,715. So $5,715 divided by 12, you're looking at $476 is the target. And the maximum is the guideline level premium, which comes out to the $6,282.84, which was that $543 we just talked about. So all the numbers are there for us. So we don't need to go back and forth and putting it. It gives an idea what it looks like here. There's, of course, there's always a single premium amount. If the client wants to buy the policy and just drop in one single premium lump sum, that's an option as well at $72,738. And then the final option is a 7-pay premium. That means for the first 7 years, to really max fund the policy, you can put in $17,460 for the first 7 years and just let it ride as well. So you have a lot of different options when it comes to funding this policy. It all just comes down to the parameters that you have here for your clients. As you can see, it's pretty straightforward and simple. Just enter the client information, some details about the client, how you want to structure the policy, a few different choices. Where you want to structure the death benefit, where you want to structure the premium, how much you're going to pay, and what the mode is going to be. We have this indexing strategies here, and then the main buttons that we use is going to be the max loan on the bottom here, or the cash flow situation, which are matching up here as well. All right. And then what's also the neat little thing is, if you don't want to click through all these buttons over here, if you just want to go straight to illustration, you can just go to the action button over here and just preview the illustration. So if you ever enter here on this page here, you can just go straight there if you want. You can also do a new illustration if you want from this action button. You can copy it if you want to do multiple scenarios. Instead of changing it like I did here, by changing the inputs, you can just create one input, copy it, change the input, and have multiple options so you can kind of save different illustrations that come your way. And if you wanted to go straight into the application, you can do that as well. You can click on the button that takes you to the Expert app on the top right there, and it'll automatically take you to the application. If the client says, you know what, this is what I want to do, I like it, let's move forward. All right, let's do it. Click on the Expert app, and it takes you straight to the application, so you can start filling that out. And it's all an electronic application to avoid all the unnecessary paperwork. So as you can see, I think American National has done a pretty great job of trying to keep it as simple as possible. A lot of different parameter options so you can run this illustration and show your clients different options.